Meantime, let's get to the Nikkei. That index hitting a fresh 34-year high overnight. This latest move coming as the yen continues to fall and speculation rising that Japan's central bank will not aggressively tighten its monetary policy. Can this run keep going? Let's go off the charts with LPL Chief Technical Strategist Adam Turnquist to find out. Adam, great to see you. What do you see in the charts here?
Hey, thanks for having me on. And you don't really need to be a technician to look at the longer-term chart of the Nikkei and see that we're in a pretty strong uptrend. And we might end a 34-year downtrend going back to 1989. That's the peak on the Nikkei, and we're trending toward that. And there's been a lot of changes in that 34-year period. Of course, one of the big changes is the government reform and the more shareholder-friendly policies that they've instilled into their economy. You're seeing record buybacks. You're seeing record dividend payouts. Households are now investing in equities there. So there's a pretty strong macro theme that's driving this. Of course, when you dive a little bit into the shorter term technicals, it's really a story of breakout, consolidation, breakout, consolidation. We did break out early this year to new multi-year highs. We just had a shorter term breakout. We call it a bullish pennant formation. And if you measure that out and apply it an upside price objective, that gets you to call it around 40,000. So Tim, you might be missed the S&P 5,000 hat, but you could be wearing a Nikkei 40,000 by year end, we think, on the technicals here.
We'll get working on embroidering that, Adam. Thanks for the tip. Part of this, obviously, is the weak yen. The yen right now is sitting at just about 2-month lows against the dollar. What do you see there?
I think right now, when you look at the yen, it's just more of a consolidation phase. We had a sharp pullback off that 152 level, came back. We're now back above the 200-day moving average. So when we look at it technically here, it's hard to argue against kind of a range-bound market, especially with what's going on with the Bank of Japan. Still ultra accommodative policy there, expecting a change at some point, but we don't think it will be drastic. So maybe 152 on the upper end, 140-ish on the low end. I think the market would welcome that and more of a normalization there in terms of yen trading.